Yeah, what's good, guys? Welcome to another lecture clip. So, in this video, I'm going to talk about two trades that we took. One was a win, and the other one was a loss. And I'm going to break down how we got those entry right using both Q zone and points of interest. Right. So the very first one is the one we took somewhere around this area, which was 2 days ago, and we took that trade somewhere around this area. Took that trade somewhere around this area over here, and the trade went all the way. We closed our trade around this area. It was like I think 1 to 4, 1 to 3 trade. So I'm going to show us how we got this trade, and I'm also going to show us how we got this one that later hit our stop loss. So this was where we targeted. So but this one did hit our stop loss. So very first thing I want to pay attention here is how I actually mark points of interest. Now, there are different ways I do my points of interest depending on what I'm seeing on the chart. Sometimes I just use normal demand zones, all right? While other times I use daily neckline. Now, you can this can be either 1 hour demand zone, depending on if it's a day trade, it can still be 4 hour, even if it's a day trade. All right, so it can be 1 hour demand zone or 4 hour demand zone. It all depends on how you just see the charts, all right, and how much you are willing to risk for in that particular day. So, this particular one over here, what I used for this first one that played out um, was a 1 hour demand zone that aligned with a 4 hour demand zone. Now, I'll show you what I mean by that. So, in this particular zone over here, when price was retracing, right, we had a demand zone at this level. Now, if I'm to go up to, you see, if I'm to go to the 4 hour time frame, you see that this is also a demand zone. Now, remember what I told you about what makes a demand zone valid. Number one, there should be a break of structure. Number two, there should be a fair value gap, and number three, it should align with the trend. Now, in this case, right, if you go to the 1 hour time frame, you will see that there is a tiny break of structure over here. There's a tiny break of structure over here. A tiny break of structure over here. Then, as you can see, there's a fair value gap, and as at that particular point in time, price was kind of changing direction to the upside. So I would say it aligned with the immediate trend of that particular day. All right. So we had those criteria met. Now, when price, so this is that demands on the 1 hour time frame. So when price got into that level, you will see that I was more interested on what price was going to do when it gets to this level during the Q zone. This is where Q zone now comes in. Now, what Q zone did we use here? The New York Q zone. So New York Q zone and London Q zone, sorry. So London Q zone, as you can see, 2 a.m. from this area, 2 a.m. to 5 a.m. So this was where my major interest was when price came to this demand zone. So when price came to that demand zone, what did I go? Go down to the 5 minutes time frame. All right, go down to the 5 minute time frame. Now, there's something I told you guys. I told you guys that if you see entries earlier, let's say for example in the first 2 hours of that Q zone, it is most likely going to play out. If you remember the trade we took today that ended up in loss, I told you guys that that the point of interest is valid, but is a late entry. Don't risk that much because I've seen it have most of the trades that normally hit my stop loss using this particular strategy are trades that come, let's say, within the last 15 minutes of the Q zone. Now, remember, Q zone in this case is a space of 2 hours, right? Is it 2 hours now? 3, 4, 5, 3 hours. So if you see the trade entry within the first 2 hours, it's most likely going to play out. But if you see if you get any entry in the during the third hour of that Q zone, then not that it's not going to play out because you're going to obviously trade what you see, but you have to risk less. So that's just the difference between these two setups. Now you can see over here, let's see when the setup actually came out. So this is the 5 minute time frame, and this over here is that 1 hour and 1 hour demand zone that align with a 4 hour demand zone. Now, what happened? Now you can see that price came down, right? Did this, and did what again? What did it give us here? Now, there are two kinds of structures or reversal structures, right? There is a change of character, which is when price comes down into a zone, does let's say something like this, does something like this, then does something like this. Now, this is a change of character. Now we have M market structure shift, MSS. Now, MSS is when price comes into a zone, does something like this, does not create a new low, but go up and create a new high. In this case, this is an MSS. So either of this, right, is what you can use for your entry, or you can use my favorite, which is CISD. You already know what CISD, I talk about it a lot, which is when price comes down, creates high, comes down, and immediately close above the neckline, right? The neckline. This should bearish order block. This is I'm talking about. This is a long entry now. So either of these three is what you want to look at for um when price comes into your points of interest. So in this case now, this demand zone was our point of interest, and once when price came down, remember, it came down around when 2 a.m. Between 2 a.m. and 5 a.m. This is when I was interested in what price is going to do inside this zone. So price came down and gave us what? And gave us what it gave us here was not a change of character, but instead it gave us a market structure shift, MSS. So this closing over here was the first signal that we are now ready to long. But I had to wait for price to give me a push on the 15 minutes time frame, because change of character is stronger. Change of character is stronger than MSS. So sometimes you might want to wait to see how price is going to react on the 15-minute time frame. So when I got to the 15 minutes time frame, I saw this push, I saw price retracing, then another push, then that was how we got into that particular trade, and the trade went all the way up to this level. So that was how we got that trade. Now let's take a look at the second one, which we lost today. So let me just remove all the drawings. So before price came into our Q zone, which was 2 a.m., this was 2 a.m. over here. It was 2 a.m. Where did we have our points of interest? Now, our points of interest we had before that 2 a.m. was we had was the where this there were I think series of daily necklines over here. So this was a neckline. These necklines serve as very strong support zones. Now you might be wondering, why did we buy when it was like the market was dressing? Because on the larger scale of things, this is actually a ranging market on the daily time frame. So you are buying low and you are selling high. That's what has been happening for like almost 2 3 weeks now. All right, so that was why these zones were still valid. If you watch, you see that even when price took us out of that trade, even as I'm making this video now, it's still reacting to that level, meaning that level is still valid. It just took us out because, yeah, that's what price does sometimes. You might not really get your stop loss to be placed perfectly. That is trading for you. So we had this neckline over here, which aligned with this particular, I mentioned this in the group, which aligned with this demand zone over here, which was a perfect point of interest. Now let's head over to the 5 minute time frame and see what price did on the 5 minutes during London Q zone that made us to enter that trade that we later lost. Now you will see what happened. Right, this was 2 a.m. all the way up to 5 a.m. All the way up to 5 a.m. Now, this is why I always tell you guys that if you see the entry early enough, it will be better for you to take it will ensure, right? It has higher possibility of playing out, all right? But if it comes late, then sometimes it might not just play out, but then you have to risk a little bit. Now, one of the reasons why we actually took that trade was when price, let's see when price starts the neckline. Now, this was the demand zone itself. So price during Q zone, price came to demand zone, went up, went down. We don't have any clear, though personally I wanted it to tap this neckline. All right, I wanted to tap this neckline. So this was where it tapped the neckline. So what I was waiting for was to see, I was looking for a CISD entry. So what I was looking for was to see price close above this zone over here. But this was what happened. The setup later came, we later had this close over here. Later had this close over here. But I think I later went down to a 3 minutes time frame. Because we CISD 3, I can remember. Say, okay, so this was actually a setup I saw that made us took that trade because it was still within the. Remember, this is where the Q zone ends, 5 a.m. New York time. So this over here, let me just remove everything so that this will be clear. So this was 5 a.m. So this was actually a 3 minutes entry, not 5 minutes. So this was 2 a.m. If you have any questions concerning this, you can drop it in the group. So as you can see over here, we had the CISD. Now, if you watch all this zone, we've not had any CISD. For example, this zone over here, price did not close above it, so there was no entry. This level over here, price didn't close above this area, there was no entry. This is a 3 minute time frame, right? But here we had this particular bearish block, and you can see price closing above it. That was when we took that trade. Now we took the trade here. Stop loss was around this area, I guess. It was around this zone. Now price went up like it wanted to go our way for some time. Then during New York, that was around that's now during New York Q zone, which is from like 7 a.m. New York time, right? Which was around this area. I normally tell you guys that sometimes once price gets to the next Q zone or the next session, it will reset to take out. It will either move the trade from London session, or we take out the trade from London session. It will either do one of these two. So you can see that it was during New York that price now stopped going our way, then came down to cost out of that trade. And even ever since, price has been reacting to that level because it's still very much valid. So guys, that is how we applied Q zone in two of those trades, all right, where one was a win and one was not lost. Now, if you notice, one major difference between the two of them was that the one that won met all criteria when it comes to even entry time frame. The only difference here was that this entry was done on the 3 minutes time frame, which was where I think that was where the flaw was. But had we got an entry on the 5 minute time frame, I believe this trade would have actually done very well. Now, the reason I say so is that if you go to the 5 minute time frame during New York Q zone, we had another entry, that same trade, and which is currently playing right now as the time I'm recording this video. Now, if you watch, this is 7 a.m. New York time to 10 a.m. Around this area is 10 a.m. You will see that price came down, still reacting to that point of interest, came down, went up, came down. Now you can see that we had this particular close above this neckline, which is a CISD. So if this was to be a trade, let's say we later took the same trade during New York's session, take a trade and place our stop loss here, you will see that we would still be in that particular trade. So this is just a video to explain better how, or explain more how you use the Q zone in taking your trade, or how you combine them to points of interest or demand or supply zone. All right. If you have any question, let me know in the group. Take care.